Hello everyone, hope you had a great weekend. So in this video, we are going to run you through all the weekly forecasts we have posted over the weekend and to help you better understand what is our trading plan for the week so you can prepare yourself and always plan ahead. So to start off, we have the euro against the US dollar. Alright, so what I have written here is this: euro dollar made a decent rebound at the beginning of the week but lost momentum throughout the week. So it is notable that every attempt to climb higher was rejected, but at the same time the bears were not strong enough. And in fact, both the highs and lows are getting higher day by day, and every daily candle closed with a bullish body. Alright, so up to this point, I just want to go to the charts to show you exactly what I'm talking about. So you can see that actually euro dollar has been on the bullish run. It has been recovering. So at the very beginning of the week, it came up pretty well, but then it fell into a consolidation and always get rejected, right, as it climbs higher. Alright, but then at the same time, we are seeing that the lows are still getting higher. So it does seems to be that the selling is kind of a way to attract sellers to buy into this selling opportunity, but ended up it always goes up again and kind of trap these sellers. So and therefore, I think going forward, there's a high chance that euro dollar will continue to climb further from there. All right, so let's go back right here. So therefore, we shall stick to our initial forecast that euro dollar will continue to pull back towards the equilibrium level at the psychological level of 1.2 before any notable selling can happen. So this is the current equilibrium. You can see that it is actually very close. Alright, so the upside can be quite restricted in a way, because once it touches this level, as I have mentioned here, there might be more of a notable selling at that price. And so should the price breaks and closes above 1.2, which is what we really hope for, alright, it should be able to reach 1.21 effortlessly, and this is what we will be focusing on this week. But however, if the bull loses its handle, the next important level will be the 1.18 right at the bottom of the symmetrical triangle. Alright, so back to the 4-hourly time frame. Alright, if it's able to stand above 1.2, which is essentially above the equilibrium level, we're expecting the price to go all the way, alright, back into this demand zone at the top at 1.21 effortlessly. Why? Because you can see that this area itself, alright, there isn't much of a resistance at all. So it is like a vacuum where it will just suck the price all the way upwards until it reaches this supply zone at 1.21. And if you pull out the Fibonacci at the same time, you would realize that the 1.21 price is actually at the 61.8% retracement level as well. Alright, so that is for the euro dollar. So moving on, we have the gold. Alright, so gold ranged throughout the week with every attempt to rebound getting wiped out over and over, just like the euro dollar. However, gold was able to stay supported and garner some boost before the market closed for the week. Alright, so going to the gold chart and the 4-hourly time frame. Alright, so last Friday price came down again, as it hasn't really reached the top yet, but it just came down. But however, it still finds support and rebounded off a little bit. So if you look at the 1-hourly time frame, you can kind of see the price starts to curve a little and start to go up as well. So coming back, we could expect the bulls to fight back again this week, since the gold was able to survive multiple rejections after an extremely bearish week, and not forgetting that it is still technically oversold. Alright, so the week prior to last week was extremely bearish. As you can see, it fell all the way 1,860 around the price, came all the way down to 1,760. Alright, a very huge drop. But then it's still, but however, as it recovers, and although there are sellings at the top, it is still able to survive and stay somewhat supported even at the end of the week itself. Alright, so this week we want to continue to look for buying opportunities and we probably will get one at the very beginning of the week. Just like I've shown you just now, there is a curve and it starts to go up. So at the very beginning of the week itself, there is a good chance we might be able to catch the bull going all the way up, at least back towards the top of the consolidation. So if the bull is able to take over the current top at 1795, it should reach 1820 before facing another resistance. And if the bull starts to trend, we might get a V-shaped recovery, and it will quickly reach the equilibrium level at 1858. And should the rebound this time fails and supports get broken, then we might get a stronger demand at the neckline level of the previous double bottom at 1747. Okay, so going back to the chart, so what we are actually expecting this week is that the bull will continue, and should the price stands above this resistance level, all right, it should be able to go all the way into this supply zone, all right, somewhere 1820. And if it goes really well, all right, it will create somewhat like a V-shaped recovery right here, all right, a V shape that goes all the way back to the equilibrium level right here, and that is also the retracement level, right, of the Fibonacci retracement of 61.8%. So it is very similar to what we have for the US dollar, because end of the day we know that the price is very oversold right now. All right, so last week we've seen consolidation and price is still getting supported, as I mentioned. All right, so we expect that the price may come out with a V-shaped recovery in this case, but of course we always look at the flip side of the coin. If it breaks lower, all right, it fails to get to find support anymore, then we should see it go back to this double bottom neckline. The double bottom I'm talking about is right here. All right, here is a very obvious double bottom, and this is the neckline. All right, and once the price reaches this neckline, there should be a pretty strong rebound from here as well. All right, so that is for the gold. All right, so next we have the WTI. So for WTI, oil prices continued to climb last week, managed to close near the high despite a consolidation, which did cause a breakout of a rising structure. So you can see the price closed pretty much at this high. And what I mean by although despite a consolidation did cause the breakout of a rising structure, we of course have to go into the charts again. All right, so right here in the 4-hourly time frame, all right, this is the rising channel we are talking about. Okay, so you can see that the price actually broke below. But however, it gets supported very soon, and the price just went up, and it closed at a high. So coming back to our forecast, it was climbing within a rising channel, right, just mentioned, but was broken eventually after facing multiple rejections at 74. All right, but however, a bearish trend was not even able to form, and the price quickly rebounded off from the bottom of the consolidation and continued with forming higher lows. So this week we will wait for a pullback towards 73.5 to go long again, but keeping in mind that the upside could be limited as it's about to reach the equilibrium level at 76.6. So coming back to the chart in the 4-hourly time frame, yes, so it went to consolidation, still found support at the bottom. So basically after it broke below, there wasn't any bearish trend to begin with, and very quickly it went up again. So we expect to go up further, and therefore we also want to take note that the upside is kind of limited as well, but however, the upside is still very enough for us to make a pretty good profits. I mean, based on what we just said, okay, we are waiting for 73.5. Why? Because if you look at the 1-hourly time frame, this is where the price broke out of this resistance, somewhat like a neckline of a inverse head and shoulder. Well, I don't really want to call this an inverse head and shoulder, but anyway, it resembles that. So this is still a neckline. You can see that there's a lot of trades going on right here, spike low and goes all the way up. So I believe this will be a good demand level for us to take note of. So therefore, if price goes down to this level, we want to essentially look for a buy, and then of course looking all the way back to the top at the equilibrium level 76.6. and that will still give us a very good risk reward ratio, all right, end of the day. So of course we're going to talk about it in our daily forecast later on. All right, so that is for the oil. Moving on, we have the NASDAQ. So NASDAQ, along with the other US indices, made a strong bullish run, broke a new high again, right, breaking new high once again. It was trading at the top of a 3-month rising wedge, and it did get rejected at first, but quickly regained losses and continued to climb higher, and even breaking out of the rising wedge. Alright, so this is the rising wedge. I'm not sure if you can see it very clearly. Maybe I try to pull it up. Alright, so within this channel there's a rising wedge, and you can see there's kind of a break above last week as well. So as such, we can continue to eye for more upside towards the top of a potential rising channel. At current, the price is already about to test a demand zone at 14,320, supported by a rising trend line as well. And so if the price rebounds successfully, it will reach a high as it will likely to reach as high as 14,700, and should the price fail to rebound earlier, it may pull back towards 14,100 to retest the previous high. So coming back to the charts, alright, so we are seeing that the price is about to reach this demand zone at the bottom here, because this is where the price break higher. Alright, pulls back once, pulls back the second time, and last week it managed to close just above this demand zone. So we might get a chance to buy the NASDAQ very quickly. And why we are bullish on it? Because it has essentially started to break out of the rising wedge, right? Started to break out of the rising wedge last week, so therefore we are kind of bullish buyers, and of course all the other US stock indices are bullish as well. But however, we also want to take note that if the price breaks below this support, it's very likely to go all the way down to 14,100, which is somewhere right here at the bottom of a rising channel, because that was the previous historical high, right? Somewhere right at this level, and it actually found support. As you can see, why is it 14,100? Is because of this support. Right, price broke up, came down, went up, it found this support before it shoots all the way upwards, which is why we specifically talk about 14,100. Okay, so that is for the NASDAQ. And last but not least, we have the Bitcoin. So the Bitcoin obviously still running over the weekend. Alright, so Bitcoin was the typo. Bitcoin has fallen back into the demand zone below the 50% pullback level and was able to rebound off again. Alright, so you can see it goes into this demand zone, rebounded off. However, the buying stopped despite the breakout of a falling trend line, and it fell back into the same demand zone over the weekend. So the trend line, alright, obviously I have to go to the charts to show you. So I think in the 1 hourly time frame will be good enough. As you can see, this is the falling trend line, and it broke above, alright, came down, found support, went up again, but quickly came all the way down, and over the weekend it reaches the demand zone again. So this is what has happened. And so as of current, we are still seeing persistent support and a rebound from the same trend line that was broken last week. So we could expect Bitcoin to recover towards 35,000. Subsequently, the supply zone sitting above 37,000. But should the bull give way, the next key support is seen at 23,000. Okay, so as you can see, this trend line that has been broken has been retested once, but the price came down. But over the weekend, or rather yesterday, it found support at the same trend line again and within the demand zone, and price has already started to rebound off. So we are expecting it to go higher and essentially goes back to the top right here into this supply zone at 35,000 or about 36,000, and should the price continues to recover, alright, it should be able to reach 38,000 supply zone right at the top here, because that is where the price broke below of this rising trend line as well, rather in fact it's also a rising channel, as you can see. So over here there will be a very strong supply. So if the Bitcoin is able to continue to go up, which it does seems to be pretty there seems to be a pretty good reversal setup right here, all right, based on the charts pattern. So yes, we can expect to buy the Bitcoin, and as of now, I think once the price comes down again and retest this level at 32,300 will be good enough for us to try to go for the buy again. All right, so that is for the Bitcoin. Okay, so with that, I have come to the end of our weekly trading forecast. So thank you so much for watching. Hope you are ready for the week ahead, and I will see you again tomorrow.